Welcome back. More earnings are ahead this week. So we've got the trades on NXP Semi, Air Products, and Realty Income for today's edition of Earnings Exchange. Joining us for that is Marianne Montaigne, Gradient Investments Portfolio Management Consultant. Marianne, it's great to have you here. And let's dive right into it.
Thanks, Kelly.
Of course, NXP Semi has actually been on a good streak in terms of results, but it's been a tough stretch for the stock lately as concerns persist about the sector. It's up 14% this year from that AI tide that has raised all the chips. But the past 3 months, it's a little bit different story. Stifel is focused on what's going on with the automotive space, mobile demand. They say near-term margins may have peaked as semis slow more broadly. Would you be a buyer here?
We wouldn't. We think it's still too early because the return to growth in China just has been very disappointing. It really hasn't accelerated like we thought it would. The auto production, of course, is boggled by that 6-week strike across the auto industry. And we think that the outlook is perhaps a little dour for auto production quarters. So the only positive is that AI. And we just think that management's going to talk about those headwinds, and we would not be a buyer.
Are you bullish, or I don't know maybe how you describe it, if you have a take on the semiconductor space more broadly here? You know, it's been kind of a rising tide, like we mentioned, but now we're seeing some more headwinds, some more differentiation, a lot of talk about when we're really going to get back to kind of a normal here.
Yeah, I think it's pretty broad-based, all these headwinds. I think it's completely across the semiconductor area.
All right, so NXP, just one of the names that you might be a little cautious on. There's the SMH, still up 46% year to date. Let's turn to a different category entirely, which is Air Products. The shares of that industrial gas and chemicals company are actually down about 5% this year. Wells Fargo optimistic about the $17 billion mega project backlog for hydrogen clean energy conversions, but they're still concerned about increased capital spending, rates, volatile energy prices. Well, what would you do with a stock like this, Marianne?
Well, this is part of a duopoly, and we love finding companies that are in a duopoly with just one major competitor. And here we think that the growth in the company is not fully priced into the stock. So we think there's mid-double-digit earnings growth ahead. And our target price matches up with that, but you add in a 2.4% yield and you're over 15%. I'll take that on a duopoly any day.
Any chance that that duopoly gets disrupted regulatorily or otherwise?
I haven't heard anything of substance, no.
Yeah, no, I agree. I think this one's a little esoteric for those kinds of discussions. Let's turn then to the income space, REITs and so forth. Realty Income REIT is down 20% year to date, but starting November pretty strong after announcing its acquisition of Spirit Realty. Mizuho bullish on the deal's boost to funds from operations, but concerns about rising rates and tenant credit persist. Yeah, this is a tricky one. Ticker O, Marianne, how would you play this one?
Well, we used to like this because it was historically very stable type of operation. They worked with a lot of grocery stores and convenience stores. You don't get anything more stable than that. But they are in the retail space, and that's a problem right now. And that's why it's underperformed both the sector and the market overall this year. That acquisition of Spirit Realty was really not well received, even though they are talking about being accretive to earnings near term. It just has a slower growth kind of business. And we prefer in the retail space American Towers and also Extra Space Storage.
Interesting. Okay, I was going to add, by the way, Realty Income CEO Sumit Roy will be on Power Lunch Wednesday for an exclusive interview after those results. We're looking forward to that. Because rates have now dropped, Mariana, especially in the past week or so, does that make you take a second look across the REIT space, some of those more rate-sensitive parts of the market, or do you stick with kind of the fundamental headwinds that you see?
Well, we do like the more interest rate sensitive sectors with not necessarily a big drop in interest rates, but what we view as the cessation of rate increases out of the Fed. The REIT sector is more interesting to us, some utilities. But again, we're stock pickers, so we don't do broad brush on any sector.
Yeah, that makes sense. If I had to ask you off the cuff, what are your top couple of stock picks right now, maybe into year end or for the next kind of few months here as we navigate both the rate environment and the recession risks people are worried about?
Well, we like some of the pharma companies. You know, they're more like consumer staples, which I see are both leading today. But we think there's a lot of cash out there. They can be acquirers of some, good stage three or phase three kind of biotech names. They can buy back shares. Bristol Myers is one of our favorites there.
All right. And a lot of people looking more closely at that space lately. Marianne, thanks so much for your time today. We appreciate it.